Last year, Americans missed out on over $4 billion in potential tax savings just because they didn't know about this one IRS-approved move. If you're over 70 and a half, you might be paying more taxes than you need to, even if you're giving generously to charity. Today, I'm showing you how to use a qualified charitable donation, or a QCD, to cut your tax bill, support causes you care about, and possibly reduce your Medicare premiums, all legally, all under the IRS rulebook. A qualified charitable distribution lets you transfer money directly to or from your IRA to a qualified charity, and that amount doesn't count as taxable income. A qualified charitable distribution lets you transfer money directly from your IRA to a qualified charity, and that amount doesn't count as taxable income. You still get to help your favorite nonprofit, but you also avoid paying income tax on that money, unlike when you take a normal withdrawal from your IRA. Think of it as a double win: generosity and strategy in one. Let me give you an example, and let's say a client of mine's name is Susan. She's 74. She gives $10,000 every year to her church. She was just writing a check from her bank account. When we switch that to a QCD from her IRA, she saved over $2,500 in taxes without changing the size of her gift. This strategy is simple, powerful, and underused. So who can use a QCD? You must be 70 and a half or older. It must be from a traditional IRA. It must go directly from your custodian to the charity. You can give up to $100,000 per year this way. And if you're married, your spouse can do the same. Don't try to take the money yourself first. It has to be a direct transfer, or it won't count as a QCD. So here's why this is a big deal. When you do a QCD, that money doesn't get added to your income. And that matters because it keeps you in a lower tax bracket potentially. It could help you avoid the Medicare IRMAA surcharge, and it helps satisfy your required minimum distributions if you're over 73. For retirees who are giving away, QCD can make the giving smarter. But there are rules. You can only give to qualified 501c3 public charities. You can't use donor-advised funds or private foundations. The custodian must send the money directly. And don't forget, report it properly on your taxes. Put QCD and list zero taxable income on your 1099-R. Here's when a QCD really makes sense. If you don't need your RMD for income, you already give to charity, you want to keep your taxable income lower, and you're looking for tax-smart saving strategies or giving strategies. Even if you don't itemize, a QCD gives you tax benefits. So remember, QCDs let you give directly from your IRA. They reduce your taxable income, and they can satisfy your RMD. If you're 70 and a half or older and giving to charity, this could be one of the smartest moves you make. Hit subscribe for more smart retirement strategies.